Let's get right into this. If you don't know about Charlie Munger, he is the vice chairman of Warren Buffett Berkshire Hathaway and has been a highly successful investor for a long time. So in today's video, he purchased 165,320 shares of Alibaba, giving the position 19.2% weight in his daily journal portfolio that he manages. And he has bought these shares at an average price of approximately $245.98 during the first quarter of this year, 2021. And if you don't know about Charlie Munger has been in the stock market for multiple years. Here are his partnership results in the 1960s and 70s, beating the S&P 500 with a big margin, with almost 12% more returns compared to the S&P 500 and the Dow Jones. And he has outperformed recent results of investors such as Cathie Wood and even Peter Lynch. In the quarterly filings of Daily Journal Corp, managed by Charlie Munger, we can see that he did a buy of Alibaba of 165,000 shares approximately, and that's accounting to 19% of his portfolio. So we can go ahead and look at his history. We can go all the way down, and he has not made any changes for a really long time. We can see that last time he made a stock was this time, and the only time he made activity was when he made a sell on his PKX, where he trimmed up most of his position. So during this time, he has not added any stocks, and he's decided to add on to Alibaba in this quarter in 2021. So let's go ahead and look at what Alibaba does and why did Charlie Munger buy Alibaba after many years of not buying any stocks, and especially during the COVID-19 pandemic. So Alibaba is one of the world's largest retailer, e-commerce giant, and it's been compared many times as China's Amazon, with millions of people using their shopping platform monthly and with operations around the world in 200 other countries apart from China. So the company is made up of multiple sites such as Taobao.com, Alibaba.com, Tmall.com, and basically Taobao.com is a consumer-to-consumer platform, while Tmall is a business-to-consumer platform, and AliExpress, which sells goods and services outside of China. They also have Alipay, which is basically like PayPal, a digital currency that you can use to pay for on Taobao or Tmall when you're buying goods and services. They also include a shipping company, a messaging app, entertainment studios, and many others. Growth has been also at a rapid pace in China and in other major international markets for Alibaba, and markets have changed tremendously and probably forever in the last decade, moving to e-commerce, and we've seen this a lot during the pandemic, and it's definitely a good industry to be in and for the future. And basically what Alibaba does in simple words is they can be used by anyone for anywhere for anything, and so Alibaba is a good stock to have because it gives you exposure a little bit away from primarily a company based in the US, and this will be a lot less affected if a market crash does occur in the US, or inflation or interest rates negatively affect the US dollar, because this company is not just based off of US, and they have a lot of customers in another country, so it gives you a little bit of exposure to the rest of the world instead of having only stocks in the US. If you look at big investors such as Ray Dalio, he has a lot of exposure in different markets such as gold, US dollar, and especially in different countries, because you want to be able to diversify yourself in case of market crashes and be able to lower the amount of impact that you have. So this is a really good play. And as we can see from the price that Charlie bought it at, he bought it at $245, and it's currently trading a lot cheaper than that at $230. So it shows that it's trading below Charlie's price, and that's the value that he bought the stock at. So by buying now, you're buying even below him, and you have creating a margin of safety for yourself and buying yourself at a good price. Diving into Alibaba's financials, we can see that the company is continuously growing. So if you look at the revenue, it's on a steady growth, which is very nice to see. Same thing is the case with the income; it's gradually increasing. We can see that the revenue growth has been pretty insane for year to year as well as quarter to quarter, and we can see that the PE ratio isn't very high compared to some of the other options available in the market today. It is pretty high, but it's a lot less compared to how low interest rates are in the market and how much stocks PE ratios have been in the last couple months. Looking at their debt as well, we can see that their debt is really low, showing that the company is earning without accumulating debt to increase their growth. Looking at also their return on invested capital, this is really nice. It's almost at that 20% mark that we always want to see. So the company is continuously adding on to their growth rate, as well as increasing their cash operations, increasing the value of the company. We can also see that the return on equity is almost at that 20%. It's continuously growing, which is always nice to see. And the profit margin is already 30%. So the company is already generating good amount of money and increasing the amount of money they make. Also, looking at their balance sheet, we can see that the amount of cash and the investment that they have is a lot more than their debt, which is nice to see that the company has a lot of money, which they can go ahead and make more investment as well as acquisitions. So that's always nice. Looking at the intrinsic value, I went ahead and put in all their numbers. Currently, their intrinsic value is at $232.55, and they're currently trading at $230. So that gives us a discount of 1%. But if you look at their margin of safety of 25%, they are trading well below that amount. So we are already getting this company at a fair price, and we're not overpaying for this. So that's always nice to see. And as I mentioned earlier, Charlie Munger bought his shares at $245 at the average price. So by buying right now, you're buying below his price and what he values to be a good price for this company. So that's always a good thing to see. Quick technical analysis on their chart. You can see that they're on a continuous growth. They've been increasing weekly by weekly. They're on an upward trend. That's always nice to see. And you can see that they're trading well below their moving averages. So you're getting at a discount. This primarily has to do with the fact that the whole market had a correction. But we can see that the price that we're going to be getting them is a lot less compared to what we could have been getting them previously. So we have that margin of safety going ahead into this buy. So let's go ahead and look at price targets for Alibaba. As you can see from 17 analysts, it's a strong buy, and it's currently trading at $230, and the lowest projection is at $285, as well as the highest is going at $407. So that's a pretty big increase, and the average price target represents a 42.75% from the last price of $230. Overall, I think Charlie Munger's player is actually pretty good, and he has said before that opportunity only comes a couple times, and you should always take advantage. So as we can look, when he's looking to buy good investment, he goes ahead and he makes sure he follows these 4 good criteria. So the first criteria being understandable business. So if he has a good understanding of how this business operates, as well as what they provide. I discussed this earlier in the video, but he has a good understanding of that. He also sees favorable growth perspectives. So we saw on their financials how steadily their growth was going, and it's always been increasing. Their revenue is increasing quarterly, yearly, which is always a good sign. So it follows that criteria. Also, he goes ahead and look at their management. I didn't discuss too much about management, but their management is top tier with their previous CEO, as well as Jack Ma, their co-founder. So they've been progressing really rapidly, as well as they've been doing pretty well as a management team. As we can see, and his 4th criteria is available at attractive prices. So the stock is trading at undervalued prices comparatively to our intrinsic value calculator, and there's also a margin of safety as we looked at, since it's trading below the price Munger bought it at, and it currently is below its moving averages. Alright guys, I want to thank you for watching this video. If you did enjoy and you want to see more content like this, go ahead and subscribe and leave a like. It's much appreciated. Alright, have a wonderful rest of your day, guys.